things talk about. Yeah, yeah, yeah. All the things they're all about. Yeah, yeah, yeah. Write it on a piece of paper. Got a feeling I'll see you later. There's something about this. Let's keep it moving. And if it's good, let's just get something cooking. 'Cause I really wanna rock with you. I'm feeling some connection to the things you do. You do. I don't know what it is.
Welcome to Reflections of a Diva. Today we are discussing the road to home mortgage. With today's economy being so awful, the rate of foreclosures is increasing every month. In fact, it increased over 53% last month alone. What you don't know is that opens up the road for new homeowners. There are a lot of homes that are on the market at reasonable prices, and there are a lot of new programs designed to help people with less than perfect credit. Today, our guest, Ms. Angela Farrow from First Service Mortgage, will give us some tips on what you can do to be the next homeowner. Welcome, Angela.
Hi, Angela. Thank you. Thank you for having me.
Can you please tell us about First Service Mortgage and what kind of programs you offer?
I sure can. First Service Mortgage is the largest minority lender in the Southeast. We've been in business for about 13 years, same original owners, original name, and we are a lender. I know you hear about lender versus broker. Mm-hmm. We are a lender, and what a lender is, that's someone who has the money. We have the money. We don't count on other banks to give us the money. We table our own funds. We have in-house underwriting, in-house processing. So we do everything in-house.
Wonderful.
In-house. So it makes us cut out the middleman, and it gives us a lot more opportunity to help more people to become homeowners.
Okay. How competitive are your rates right now with other major banks such as Bank of America, et cetera, et cetera?
We have competitive rates. We have the same rates that the banks have. And of course, you know, rates are based on a lot of different factors.
Okay.
But we can give good rates, and I recommend the 30-year fixed loans versus the adjustable loans. So we try to get buyers in good loans. Your FHA, we do VA, that's the new comeback right now, is VA. We do conventional, we do commercial, investment, and even the reverse mortgage.
Well, tell us some of the factors that would affect someone's interest rate.
Well, the interest rate is based on the overall risk factor of the borrower. They look at your employment, they look at your credit, they look at money saved, they look at the loan amount. Several factors will determine the interest rate, but it's going to be reasonable. If someone is giving you a rate that's way beyond reason, then that's something that you might want to look at. But it's going to be based on the overall risk level of the file.
Okay.
Now, I heard you say that you're a minority-owned lender.
Yes, we are.
That's great. That's
Absolutely.
awesome.
Absolutely.
Go ahead.
Yeah, as I said, we are the largest minority lender. And, I really want to stress the word lender.
Okay.
Lender means we have the money. We're directly through FHA. We make the decisions. And, there might be someone who might have a credit challenge or an unusual circumstance. Certain things might have caused a person to get behind on their bills, sickness, death.
Exactly.
Life happens. Life is going to happen. So we're able to work around those items. We're able to come up with a good reason and prove it, of course, and we can still get beyond certain hurdles, as opposed to just having someone come in and you don't qualify, goodbye. We're going to work with you. We're going to help you. We're going to put you in a class, something to help you to the road to home ownership.
Yeah, that was my next question. Actually, those that have credit challenges, so on and so forth, are there any types of programs specifically, or do you have counselors available that sit down one-on-one and kind of work with them with their bills and budgeting and different things to kind of help put them on the path?
Absolutely.
Okay.
What we have is what's called, every month, free of charge, we have a credit counseling class.
Okay.
We volunteer our services.
And that is free. Free. That's good.
Absolutely. Out of the kindness of our heart, because we want to see people become homeowners. Out of the kindness of our heart, we volunteer monthly the third Saturday of every month.
Okay.
We bring you in the class from 10 to 12 a.m. with your credit report, and we go over it with you. We give you some of the tips of what to do, what not to do, things that you should do, things, show you how to get things off of your credit,
Okay.
things like that to help you. And if you follow our plan and what we give you, one person might be ready next month, might take the next person 3 months, might take the next person a year. But if you follow our plan, you will become a homeowner. My motto is, at some point, everybody qualifies.
That's good.
At some point, everybody qualifies.
What's the bottom credit score that someone needs to have?
Well, right now, with the market the way it is, the bare minimum, you're looking at about a 580 middle score. And we go by the middle highest. If you got a 400, a 500, and a 600.
Explain that. There's
Sure.
yeah, explain that.
Exactly. If you have a 400, a 500, and a 600, the 500 is your credit score, the middle highest score.
So that comes from the 3 major credit bureaus.
Equifax, TransUnion, and Experian.
Okay, so our viewers at home, you need to pull all 3 of your credit reports before even applying.
It
Is
will
that
really
correct?
help
Okay.
for you to know what's on your credit.
And you can get them for free in Georgia, up to 2
Go
a
to
year, right?
www.annualcreditreport.com.
Okay.
And you can get a free copy of your credit report from all three once a year.
per year.
Once per year in Georgia.
And then, of course, you can go directly to the credit bureau and get it. If you've been denied some credit, you can go directly to them, and you want to look at it and know what's on your credit, because most people don't know what's on their credit. And when they come to get a house or get a car, they say, well, I didn't know that was on there. I didn't know. Take a look at it, because you never know what's being put on there until the damage is done. And when you get ready to apply for something, you don't recognize what's going on. So and it also prevents the identity theft.
Okay.
Because identity theft can go on and you don't even know that it was even there until you got thousands of dollars in
Racked up
debt,
in
and
your name.
it's not mine.
Right.
So if you catch it early by checking your report on a regular basis,
Right.
then you will be able to prevent that from happening.
So each credit bureau could have a different score.
Absolutely.
And the middle range
The middle
score is
highest.
is what
It's
you
what the
look
lenders
at.
look at.
And you need at least a 580 for a new purchase, right?
Well, it's for any, and there are certain loans that are credit score driven. However, there is a minimum that they want you to have, because if your score is low, it's a reason why. You could have judgments or repos, or I can tell you this: recent lates are the kiss of death for your credit score.
Okay.
And every time I teach a class, I repeat that over and over again. Recent lates within
Recent
the last
late
12
payments.
months,
Okay.
yes, ma'am, are the
Okay.
kiss of death for your credit score. So you want to make sure that you're not late on anything. But if by chance you happen to have a late or two and it's explainable,
Okay.
there are people that have been in an accident,
Okay.
had a job layoff, downsizing, death, divorce, sickness. If we can show that, we're common sense underwriters.
Okay.
Common sense.
That's important.
Common sense.
Yes.
It has to make sense.
Okay.
We can work around that. We can document it and we can show it. We can. There's so many things that we can do to help you work around or get you ready. Or you might be ready now. Most people don't think that they're ready now, and they are. It amazes me. I didn't think I could qualify to get a house, and when we take a look at their credit, it's really, really good. It's not hard. The biggest thing that you need 2 years of verifiable employment.
Okay.
Okay.
That's taxable employment, not getting paid under the table.
Okay.
Taxable employment.
Okay.
And it doesn't have to be on the same job. You could have been a teacher in Texas for a year. And
Okay.
You came to Georgia and you just started a month ago. It's okay. We can connect the jobs as long as
Okay.
there's not a large gap.
Okay.
6 months or so.
Okay.
That's not explainable. You need verifiable rent, and it doesn't mean that you have to have an apartment in your name. You could have been living with a relative, living with a mother. We can use that as rent because you're going to be contributing
To the household.
So that would be considered your rent. So don't think because I'm living with someone and the rent is not in my name. There's so many ways to work around that. And there's another tip. A college student that's fresh out of school,
Okay.
can get a house as soon as they get their first paycheck.
What?
Wow.
The 2 years that they were in college,
Wait, say that one more time.
a college student that's fresh out of school, it could be a 2-year college, a 4-year college.
Okay.
As soon as they get their job and get their first check, they can qualify for a house. Guess why?
Wow.
The years that they were in school, that counts as employment.
Wow.
They kept employment for 2 years.
See, knowledge is power.
Yes.